All right. Good morning, everybody. We are live this morning. Want to see what the market gives us today. It is 9:30, so let's talk about it. Right now, the market has broken out of this consolidation little range that it had over the last few days. And you can see it's now making higher highs and higher lows on the daily. So we have to be careful that this may be potential divergence to go down. However, we will take opportunities based on our setup, right? So the daily is up, higher highs and higher lows. So we'll be looking for the market to continue to the upside. Also, there's a Christmas rally, the holiday rally kind of pushing that usually ensues to the upside in this time of year. So take advantage of those opportunities as you see them as well. And we are ready to get started with our day. Got Mr. Ron Jones III in here again this morning.
Good morning.
And man, I'm stoked and super excited actually. So we're just now looking for our opportunities. Got Mr. Quentin Brooks online with us too. I don't want to forget my guy, Mr. Quentin Brooks, is on with us as well. So we will definitely be taking a look at the markets and taking advantages, hopefully, of whatever opportunities it decides to give us today. That being said, we're about to start the recording.
Recording in progress.
And pull. All right. So, Quentin, let me just make sure. What do you see on your screen? Do you see where it says Sierra charts at the top, or you just see the actual chart that says 2700, 900, 300?
Yeah, I just see your super just the chart. I don't see Sierra.
You don't say, okay. All right, cool. So, ladies and gentlemen, there's not been an opportunity yet. So we wait. Again, we don't trade it. Now we trade the 9:35 hour. So we're just gonna sit here and chill. I need you to write this down in your notes. 11:29. We have a higher high and a higher low bar where it broke out of the consolidation range on the daily. So just like we suspected, right, the market should be trying to move up, which is what it's doing.
It's a higher high and a higher low bar.
Yes. And the market's pushing with volume to the upside.
Go ahead, Ron. I see you, man.
Yes, sir.
So, ladies and gentlemen, we'll sit and be patient. I think that we got all the latency issues that we had yesterday. I did some troubleshooting, and we should be good to go.
You said it's pushing the volume to the upside.
I'm sorry.
You said the market is pushing the volume to the upside.
Yeah. It's got a lot of volume to the upside today. You can say that it's got a lot of volume to the upside today. So I'm gonna tell you now, ladies and gentlemen, it's gonna be a while before we get an opportunity because the market has literally pushed hard to the upside. When I say hard, I mean it literally has gone up like 60 points since the open. And it hadn't looked back at all. So Ron, I'm gonna show you something so you can see what I'm talking about. At 9:31, it gave you this trade. We don't trade at 9:31.
Mm-hmm.
However, it gave you this trade here. And what I'll do is I'll highlight it. I'll highlight it so you can see it. Now, there's tools, and let me go in. And it gave you this on the 300. Remember I told you down arrow, then up arrow.
Mm-hmm.
There's your pullback. It's green right here, right? And then it's, you see what I told you, where the, ladies and gentlemen, I'll teach you something here that's a golden nugget, right? This is something that you can do on any chart. I would recommend you use volume charts. That's my recommendation. And I can explain that in a private session or one-on-one, because that's a lengthy discussion. But if you look at here, why I have the pointer. Can everybody see my pointer?
Yes, sir.
Can you see the pointer, Quentin?
Which,
On the 2700 I have it on?
yeah.
All right, you see the pointer. So you see where price got below this bar here. It's called a fake move. And this is where professional traders live. I was telling Ron this the other day. Professional traders live where they fake a move to the downside. And that's what we call pauses in the market. And then once it does that, if the trend is up, then once it starts to go back up, we can then go back up with the market using smaller time frames and catch that move, right? There hasn't been another trade that happened since our 9:35 time. Our rule is to not trade until 9:35 to give the market an opportunity to do what it's going to do. And I mean, that's really it. We just sit here and wait for our opportunities, and we don't force anything. We have a set of rules. We have a system in place, and we will trade our system when we trade our rules, right? And that's what we do every single day. And we'll call the trade once it happens.
So would that have been considered a poke bar?
It's considered a poke bar, correct, right? Because you see where the momentum is going up, and you see where price tried to fake to the downside.
Yeah, okay, I got
And then the trend is definitely up, because our moving averages kind of dictate where we think the trend is going to be.
Yeah, okay.
And you see how everything is kind of pointed up.
Mm-hmm.
So it is really just a pause in the market. That's when you get on. It's literally.
So when that, on the, what is that, the 300 volume, so when that green arrow would have printed, that's when we would have
got into the trade.
Okay.
Now,
okay.
let me show you something right here. I'm gonna go ahead and mess your brain up today. All right. You get in right here, the price on the chart at that particular point is 68.75. Right. And then your stop is going to be 59. So you in at 68 out of 59. So that's 9 points times $20 is $180. So you risk $108 on this trade. Ladies and gentlemen, let me also do this. Let me kind of highlight. I didn't highlight it on my other. I want to highlight it here as well. So give me 1 second and then we'll get back to it. I just don't want to forget to do that. All right. This is real simple stuff. All right. So that would have been an entry on that chart. So now watch this. Watch this, young sir. The entry was 68, I told you, right?
Yeah.
Stock was 59, right? And remember I told you the system would get you out on the star, right? That's a star right there.
Yeah.
So you in at 68, star would have got you out at 95. So that's 27 points.
And so how much would that have been?
27 times 20 should be $540.
And you risk 180.
Yeah.
Okay. Well, we would have got out sooner than that, though.
Well, maybe not on a day like today because it's trending. This is what I'm talking about. This is the part that people, you can't trade in a vacuum. Like you can't trade one way all the time because the market dictates how you should trade. Like if there's a lot of volatility, you can go for a lot of points. If it's trending, you go for a lot of points. But like yesterday, it was low volatility. We was having technical issues. All those kind of things give you reason to pause and step back. Remember when I said the mark of a great trader or a good trader is to add on to. You can't be in enough contracts, ladies and gentlemen. You cannot be in enough contracts if you're right. And when you're wrong, you can't be in as few contracts as you can be in, right? So if you're wrong, you're going to be wrong on one. If you're right, you're going to be right on 20.
Exactly.
You get what I'm saying?
Mm-hmm.
And that's it, right? That's all it is to that for me. So now we go here. It didn't give us a trade. Yeah, it did right. Gave us that short, but I wanted to take it that short, so we're all right. The same thing here. It gave you this trade here on the 100, where the arrow is right there.
Mm-hmm.
And got you out right over here at 88. There you go.
You're talking about a 943.
940. About 940. It was counter trend though. So that's why I didn't. That was counter. It was a trend within a counter trend trade.
Yeah, I see it. Just wait for a second, gents.
All right. All righty. So we wait. We wait. Keith, good morning, Keith.
Good morning, everybody.
Hey, so check this out. There's only been one trade, and that was a counter trend trade, so I didn't call it. It was a trend within a counter trend trade versus a trend within a trend trade. I went to the 100 because of the volatility. The volatility now is back. I mean, it's moving. It's humming today. It hadn't been humming the last couple of days before today. That was an entry right there, but Quentin's not here, so we'll see what this one would yield. You see that?
Mm-hmm.
Entry long at 98.50. Stop at 93. So it needs to get to 03 for it to be a winning trade. We got the 01. But again, it's long in the tooth, so I don't know if I would have called that, but we'll see what it does. It's going to go. See, it's going. It is going. There you go.
Mm-hmm.
Now that's another winning trade.
So you would have got out of there 03.
Yeah, I would have got. I mean, I've been like, shit, that thing long in the tooth is not 100% lined up. And see,
Yeah,
yeah,
that would have been a smart move, man.
you see what I'm saying? So it's all about how this market is moving. What you want to do is 100% of the time, right? You want to gauge what move you're getting into, how long the move has been happening, right? And has it had an opportunity to digest the move that it's had? Meaning, has it pulled back and tried to go down on a bigger time frame, and then it couldn't, right? It hadn't done that yet.
So where would we have gotten in on that one?
You've been in at 98.50, which is right there.
And how do you know that you need to get to 03?
How do you know?
Yeah, how did you?
Because that's the bottom. Remember, I told you when you get in on the arrow, you go to the bottom, the lowest point before you got in, which is right there at 93.
Okay.
You see that?
Yeah.
So that's how that would have gone. Uh, that was a trade within a trend trade, long, Quentin. But it was one that was, like I said, it was long in the tooth. We really want to pull back on this a nice pullback on this largest time frame, 2700. So that's what we're waiting on to see if it gives it to us. It just oh, that's ugly. So we wait. We wait. Let me make sure we are. I need to invite others, so give me 1 second here. Because now it's just
Jones, did you flush your
150. Yeah, I got you.
I mean, I got my charts up too, but I think I need to make sure I'm synced on Friday.
Okay. Go ahead. What I'm going to do right now is
Ooh, you got a nice pullback though. Ooh.
wow. What I'm doing, Ron. I mean, what I'm doing, Quentin and Ron is and Keith is I'm posting on Facebook to let people know we're here too.
Oh, that's right. Yeah, let me do it.
What's the name of this? All right. We're gonna do, if you get the arrow down, we're gonna do one micro. The test is out because it is still counter trend, but it's a lower high. If you get the arrow down, 1 micro to the downside. Uh-oh, never mind. Never mind. It's you. Never mind. Never mind. That trade's off. Yeah, it's off.
Triggered heavily.
Tell me why I said it was off. Can anybody tell me that? Why did I say, okay, never mind? It was off.
Well, if I'm looking at my 300 chart, it really indicated to the upside. So that was reason for pause.
Okay, so there's some truth to that, right? So the 300 was trying to push up, but the 2700 is up for sure, right? The 2700 is up, and it pulled back on that big red bar that you see 2 bars ago on a 2700, and it ran into that support area where that where 20 MA is kind of just sitting, and price ran. It didn't go through it. It just went to it and stopped. So that gave me reason for pause right there. It didn't keep going through it. So when it didn't keep going through support, I was like, well, no, I don't want that one. We'll wait.
Are you talking about when you got the boxes on, or?
No. The right here. So you see what I'm talking about right there?
Yeah.
So we'll wait for it to give it what we want to see and nothing less. Okay. If we get that poke bar on that 900 now, right? If we get that poke on that 900, we want to take that trade to the upside. We're going to leave this alone. We want to take it's going to be a legit trade to the upside, but I don't want to it's consolidating here. But that's the entry. We didn't take it. So it's okay. The entry is here is 01. It's going to 04, but you see how it keeps jerking. And that's the reason why. I'm not saying it won't go up. I'm just saying it doesn't have the same, it's long in the tooth and it hasn't made a decent pullback yet, in my opinion. It hadn't pulled back enough on that bigger time frame. And that thing this thing can go either way.
So what would it need to get up to for it to be a profit?
On this one here,
What's that?
97 is your entry. 97 is your stop. 01, so it have to get to 05. So in order for it to be 1-to-1. All right. I'm not saying it won't get to that, but you're trading it. You're literally in this right now trading in consolidation. And this is why it's doing what it's doing. I'm not saying it won't win. I'm not saying it won't lose. I'm saying, in my opinion, I think that's not the best decision to make, especially since you didn't get any of this move to the upside.
Yeah.
Right. So because you didn't get any move to the upside, I wouldn't be sitting here trying to force the market. The system is the system. The rules are the rules. But you have to be able to understand the mood of the market at the time that happens. And the mood right now is consolidating.
Yeah.
Because it didn't hit your target. And it's going down and it's about to hit that would stop you out there.
Yeah.
And those are the kind of things that you have to know. Right?
So that would have just been all bad.
And it wouldn't necessarily been all bad, because you got plenty of time to get out and make a little bit of break even.
A little something,
yeah. But because the name of the game is what? Number one? You forgot.
Risk management.
Risk management, but it's called preservation of capital.
Okay, yeah.
You got to preserve your capital. And then you got to make money when you're making money. Right? So what most people don't understand about that is that very thing. That is the main thing in trading. You have to have risk management, which is preservation of capital, and then the ability to make money when it's there. Like I said, be patient, then be aggressive. Right? Patient and wait on everything you want to see to set up, and then be aggressive when everything sets up. Right? Because what can happen is it can lure you to sleep. Right? I mean, it really can. It can put you to sleep. And then when it's time to make a move, you're like a daisical about the situation, and you don't want that either. Right? So, because right now I want this trade if I can get the poke bar. If I don't get the poke bar, I'm not looking for a trade. I'm telling you that now. So we just wait. Now she might be trying to come down, but it's still in consolidation a bit though. It gave you the poke bar though. If you get the arrow down, one contract.
All right, down one contract on.
Yeah. Still valid. Still valid.
All right, then at 94.75.
God. Come on now. All right, here we go. Come on. Out.
Out.
All right.
So that was a little bit of a loss.
Yeah, a little bit of loss. Ladies and gentlemen, we took one trade there, took a very, very minuscule loss. And that's why I said you don't want to be trading up in this consolidation area, because that's what happens when you trade in consolidation sometimes. And sometimes, it breaks out. I thought that thing might have gone down a bit, but it did not. So, and it's okay because I think we only lost like 3-4 points on that trade. Can you give it to me?
Yes, sir. P&L 4.5.
Yeah. All right, cool. So, that was a very, 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 very small loss in this plan in consolidation. So we still just chill out here. Quentin.
Yeah.
I didn't even see that trade. It happened so fast. But I don't want to take. I'm not taking another trade, everybody. Just so you know, unless we get out of this consolidation area. So I'm gonna draw the line so you can see it. Unless price gets out of this area here, because that area is being contained. That area is being contained. And this is the most important thing you can do when trading. You have small losses. You notice that when we have winners, we have big winners. When we have losses, we have small losses. That is the most important thing in trading. That's the preservation of capital part, right? So we don't have anything to do until this thing gets out of that range, because it's just sitting there, and it might come out. I don't know. All right, it's poking at the bottom of it. Let's see if it pushes back up, or if she continues to push through down to the downside. Okay.
That was good. Look at that.
Oh,
Well, man.
That's tough. It didn't give you a chance.
Yeah, it's not even giving a pullback on any chart. Oh, wait a minute.
would that be considered a poker on
Yeah.
900?
Huh?
Would that be considered a poker on 900?
It is football now. You see that?
Football,
Yeah. You see that, right?
Mhm.
All right.
Great.
If you get the arrow on the 300 one contract, you should be in now. Short.
And at 74.25.
All right. Yes. Out.
All right. Made up the difference. Win the green 1.75.
All right, cool. And it's probably gonna go further. Now, reason why I took that trade on the 300 is because the 300 gave you the trade.
Mhm.
Should have made a few more points on that, but that's okay. Golly, this thing better drop.
Oh my God. Don't do that. Don't do that. Oh.
But it's counter trend, but it was a legit trade. Watch for the stop. Using that price at what now?
74.25. Oh my God.
That's okay, man. It was
Oh my God.
it's counter trend. It was counter trend, man. So
Oh,
hey,
damn, that would have.
hey. So the system, I'm gonna call the system out.
And then they got so that would have been. Oh wow.
20-point trade, everybody. System yielded 20 points. We made about 7 points on that trade, I think. So that's it. So, ladies and gentlemen, that is it for today. We called 2 trades. One was a very, very small winner. I mean, very, very small loser. Then we turned around and basically double what we made on the profit side. A little bit less than double, I guess, on the profit side. And then the actual system trade yielded you probably 6-1. But we do this every day. This is what we do. Just gonna go ahead and call it for today. I appreciate you guys tuning in, but you get to kind of see how the power of price flow analysis really works, and how we do what we do. And look forward to talking to you at another time. All right. Have a good one. We'll see you tomorrow. Now I need to get out of here. So let me do this first, because I always make that mistake. Stop the recording.
Recording stopped.
And then go here and that was it.
So that could have been a 20-point win.